Welcome back. You're watching Bazaar, Open Exchange live from the CNBC-TV18 Motilal Oswal studio. Now to talk about the IT earnings, Manik Taneja from Axis Capital is with us on the show. Manik, good morning. First, if you could share your key thoughts on the three numbers and what are the trends which stand out now that we've got the entire picture a bit clearer.
Good morning, Reema, and thank you for having me on the show. So I would say across earnings that we've seen in this quarter till date, BFS continues to hold up well, and which is where the excitement about recovery in the financial services has been, and thereby numbers don't seem to be disappointing on that front. I would say growth performances across different other verticals would vary according to across different companies depending on how they are positioned and their customer concentration. Good part is that you started to see headcount increase after being rationalized through a better part of second half of FY23 and FY24. Some of it is also a function of the fact that companies are working at peak utilization rates, as well as the fact that they need to hire junior resources to manage their average cost. But it's a welcome sign. That's the way I would basically sum up the internals. From a company specific standpoint, I would say probably Wipro's numbers were in line to better than what Street expected, while for the rest of the pack that reported yesterday, numbers were in line to slightly lower than what people anticipated.
Do you think the Wipro management is being cautious when they give out that Q3 guidance, because Q2 has been strong? And today, how do you expect, or just in the near term, in the absence of fresh cues coming out from Wipro, how do you expect the stock to perform?
No, so Wipro remains the least expensive name amongst the tier 1 coverage, but that's for the right reasons given years of underperformance on growth. And we can keep on talking on and on about that aspect. That being said, I would say from a near-term standpoint, their numbers in second quarter were okay. The only negative point was the weak guidance for December quarter. And just look at this aspect that Wipro reported a positive sequential growth after 6 quarters of decline. So from a rate of change standpoint, Wipro did surprise positively in the current quarter. And what they are suggesting is that things will start to improve from the start of calendar year 25. In addition to that, you also will have some news flow around their new capital allocation policy. So there are certainly some tactical triggers for Wipro, and as I said, Wipro is the cheapest amongst the tier one pack.
So now for the next 3 months, Manik, which is when we will get the Q3 earnings, and then we will have further triggers about, further cues about the direction of the earnings growth. So for the next 3 months, which company, according to you, offers the best risk reward? For Wipro, you said there are tactical triggers. And also, if you could elaborate a bit more on the capital allocation, what should one expect?
No, so Wipro's prior capital allocation policy has been to pay about 30% of profits as dividend. And then they have interjected with buybacks at periodic intervals. But if you look at the last 5-year period, they might have paid close to about 50% of their earnings back to shareholders. In contrast, you've seen the likes of HCLTech step up their payout metrics, and that has also been a big contributor to the way HCLTech has got re-rated and now trades almost at par with Infosys or TCS. So given that Wipro continues to do well on cash generation, one would probably expect a step up there as well, and that could drive some excitement. We'll have to see as to how the business improvement plays out, because Wipro has always had a number of false starts and then once again getting back to its underperforming streak. But certainly there are tactical triggers in the near term for Wipro.
So the possibility is that Wipro will start paying out more by way of dividends to the shareholders. The current capital allocation is 30%.
Yes, that's correct.
Okay, and that could go up to 50. I mean, sorry, the current policy is 30%. They've been paying out 50%, but it can go up even higher, according to you.
That's right.
And that could be a factor for re-rating.
Yes, that's correct.
What about Infosys? Because Infosys is where, I know you've not been very bullish on Infosys, but that's where the consensus bullishness lies. What's the call now on Infosys? And when you spoke to investors yesterday, post the Q2 numbers, what did they tell you?
No, so in case of Infosys, with the way expectations were running, I would say numbers were a tad disappointing compared to where the expectations were. And from an internal standpoint, I would say there were both a combination of some hits and some misses. From a positive standpoint, you saw headcount increase sequentially. You saw guidance getting upgraded. From a growth construct standpoint, almost all verticals, with the exception of retail and other segment, grew in the current quarter. Qualitative commentary stays intact. From a negative standpoint for Infosys, I would say the pushback of the wage hikes and the fact that the growth in the current quarter once again included a higher portion of third-party software, and the third element being that that the guidance upgrade was slightly lower than anticipated. So I would say those were the negatives. All in all, our numbers haven't changed much for Infosys after this quarter's numbers.
And a quick word on LTIMindtree. They're executing well on BFSI, which is where the delta for the company will come in. What's the call on LTIMindtree?
So in case of LTIMindtree also, I would say the performance in second quarter was in line with what they had suggested after Q1. And unlike the usual improvement that you see in second quarter compared to Q1, the quarterly performance was just about okay. And over there also you saw headcount increase, but their qualitative commentary is for some moderation in sequential growth in third quarter. And given some of the wage hike related headwinds on margins, I would say the street would have cut estimates even for LTIMindtree after these results.
Okay, some EPS downgrades for LTIMindtree. Manik, thank you very much for joining in. So the two key takeaways by way of a trend. One is that the BFSI recovery is intact. All the companies have shown a pickup in BFSI. And secondly, it's heartening to see an increase in the overall headcount. So companies are back to hiring, which does suggest improved demand going forward. Remember, headcount was being rationalized for the last couple of quarters, more than a year now. But now hiring is back. Even Wipro hired about 1,000 employees on a quarter-on-quarter basis. For Infosys, I think after 6 quarters of a headcount decline, this time the headcount went up by 2,500 employees on a sequential basis.